The primary markets now. We had two IPOs opening today, Aegis Vopak, and the other one is Schloss Bangalore, which owns the Leela Palaces, Hotels and Resorts. Here's Dalal Street with a 3,500 crore rupee IPO, of which 2,500 crore is fresh. We are now joined by Ankur Gupta, the Managing Director, Partner and Head of Real Estate for Asia Pacific and Middle East at Brookfield, the owners of Schloss Bangalore. Thanks a lot, Ankur, for joining in. Always a pleasure speaking with you. The fact that you're raising about 2,500 crore for fresh issue implies that there will be a lot of debt repayment. So, let's get a couple of things out of the way first. One, what would be the interest cost savings? What would be the residual debt on your books? I suppose there was close to 4,000 crores on your books before you, decided to raise these funds. And the second part, when you look at revenue growth, you have about 13 properties right now. How many of them come on stream? And how do you break revenue growth into, increased number of rooms, increased occupancy, and increased RevPAR?
Thank you very much for having me over, and good morning to everybody from a very rainy Bombay today. So firstly, the primary proceeds of the IPO, about 2,500 crores, which is the primary issuance. A majority of that capital will be used to reduce leverage or debt on the company's balance sheets. As of March 25, the company had cash of about 1,200 crores on its balance sheet. So post-IPO, the net debt position of the company, gross debt minus cash, will be close to zero, which means for a company that did 700 crores of EBITDA, cash EBITDA, over the last 12 months, and the prospects are even stronger getting into FY26. This company will have a lot of liquidity. Right. So the average interest cost was slightly north of 9%, and reducing the debt by 2,300 crores. Will reduce corresponding interest burden for this fiscal or balance of this fiscal. But most importantly, it primes the company very well for growth using a combination of almost no leverage, right, cash on the balance sheet, as well as strong internal accruals into the future. So 150
to 180 crore average annual interest cost savings is
slightly more than that. Slightly more than that.
About 210?
That's correct.
Okay, all right. Good to have you in the studio, Ankur. Thanks a lot for coming down, and welcome to the stock markets. I think it's a great time, going by the kind of demand you're seeing with regard for hotels and, the entire leisure space. But a couple of details. As you said, your margins have been very, very strong. Now you'll be debt-free and you'll be throwing up a lot of cash as well.
That's correct.
How sustainable are these margins? Because I'm looking at your peer set from the listed space, and you're head over heels among everyone. You're around 49% or thereabouts. Is it sustainable?
So let me break down the margin into a few different components for you and for our viewers. Firstly, the focus of the business is on luxury.
Yeah.
Now, in the hotel business, a large part of our expenses are fixed in nature, which means if you can command pricing premium, and if you can invest back in your real estate or your property business with lower fixed heads, which can be sustained, that contributes to your current margin. Second part, in how do you sustain higher rentals? Yeah. I think the second part of the equation is very, very important, which is how you sell, who you sell to, and how do you service them. Our net promoter score is industry leading. So not only do we have highest rents, we have highest margins, but that's on the back of very strong customer affinity for the product. Not just the real estate, the built environment, but also the offering that the Leela Palaces offer. 800 plus touch points for every customer that begins its journey at a Leela Palace. And getting 85 out of 100 in that is almost, work of real labor. I think that is very important, and that is the singular focus of this business, which is luxury, service-oriented, high-quality properties, which constitute the Leela Palaces and resorts.
So sustainable at around this 49%.
I would like to believe.
You would like to believe it. Let's come back to the growth part, because while it is luxurious, you have still 13 hotels only. You do have a pipeline, right? Plus a near 35-40% premium over the industry when it comes to revenue per available room. Going forward, what is the kind of growth that you're targeting? Because the industry is likely to grow at around 10 to 11%. You will have the kicker of increased occupancy in your existing properties, increasing RevPARs, and newer properties coming on stream as well. So will you grow at 2x the industry?
So just to put some things in context, when the US GDP grew from similar levels like India, some slightly north of $3 trillion into 7x. So when the GDP grew 2 times over a course of a short period, this was in the 70s and 80s, and same as the data for the European Union as well. Chains like Marriott, Accor, etc., grew at 4 to 7 times, which means the hospitality segment gets a disproportionate share of underlying GDP growth. That's because business activity picks up, per capita GDP goes up, affluence levels goes up, etc., etc. So we are very confident that the luxury industry has very strong demand characteristic. At the same time, supply is very limited. India is just home to 30,000 odd luxury hotel keys. Leela's market share is more than 10% of that. I would like to believe that under the Brookfield ownership, we've grown from 8 hotels to 13.
Yes.
We've increased the margin between us and the comp set 2x. So we are commanding 20% premium. We are now at 40% premium. I think the way that the business has been established is being built for perpetuity, which means that this growth should sustain. The management team is professionally run. Our board is composed of very eminent personalities. So through a combination of focus on luxury segment, good access to capital, and an amazing brand that's been there for 40 years. Yeah. And I would also like to believe that the India story on luxury hospitality is now very well recognized in the world. We have a mass movement of domestic customers aided by return of foreign travelers. It's creating a perfect storm in many ways, which Indian hospitality has not seen for many decades.
Okay, all right. Quick couple of questions then. A couple of your properties are still, struggling, like the Chennai property, I think so. It's yet to break even, if I got that correct. Could you tell us what's the outlook there? What's the turnaround strategy for a couple of these projects? And also, are you planning on re-entering other geographies like, say, Goa?
Yeah. So let me answer your first question. Chennai property commands an amazing positioning in Chennai. It's a beautiful property on the marina in Chennai. And it commands probably one of the highest ADRs in the city.
Okay.
And at good, healthy EBITDA margins. Oh. So Chennai property is doing well. In fact, since 2019, the EBITDA has grown substantially at the Chennai property itself. But not to single out on one property itself. The growth pipeline, as you see, yes, Goa is on our radar. But we've also expanded a lot into places like in Mumbai, like in the hills. We have a hotel coming up in Srinagar. We have a hotel coming up in Sikkim. We've entered the spirituals to tourism sector. We all saw what happened.
To the specific question, there are still losses at Chanakya in Chennai, right?
I would say, those losses are on a net basis. On an EBITDA basis, these properties are contributing very, very well to the
business. When do they start turning around on a net basis?
As I said, our net debt on a consolidated basis.
So once you become debt-free, these will become net profit as well. And final question, business travel. That is what proportion of your sales? That's structurally down post-COVID, right? So how has that mix changed?
I would say that business travel has structurally changed. I would not say it's down.
Got it.
Business travels have become more, I would say, unified with personal travel. People are using the shoulder days a lot more. So the Thursdays, Fridays, and Mondays.
Got it.
Leela business on the back of 250 people who constitute our sales team is very, very hard to replicate. I'm not sure that any luxury brand exists beyond hospitality sector with such a large dedicated sales force. So I would say that the true value of the business lies in talking to our customer, both in terms of outreach as well as service.
All right, Ankur, we appreciate you coming down and detailing all of that for us. We wish you all the best with regard to the IPO. And on listing, we re-invite you to join us on the show. We'll squeeze you a little bit more for some numbers. Thanks a lot.
Thank you very much
for joining in.